Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. Okay, so today we're talking about the child tax credit. And oddly enough, I've been getting a lot of questions about this over the last week. And so the final straw was I got one yesterday. So we're talking about it today. Okay. So the main reason I want to talk about this is because, of course, there is always the fight, or the race, I should say, when you have unmarried parents who are racing to claim the child first. And that really has accelerated because of the increase in the child tax credit. So I want to kind of talk about what that looks like and everything. Okay. So, the child tax credit with tax reform was increased to $2,000 per child. Now, that is what everybody heard. $2,000 per child, but only the first 1,400 of that is refundable. So what that means is that if you have a child, if you have a tax liability of zero and you have the child tax credit, you're only going to get $1,400. You're not going to get the full $2,000. So if you've got a tax liability, let's say of $3,000 and you have the child tax credit, then you'll get access to the full $2,000. It's not going to take you below zero. Only that first $1,400 is tax deductible. Now, the one thing that you also want to make sure you understand is that there is a phase out. So that means that up to us, you can get the child tax credit up to a certain point. So the other thing that happened, what was really cool, is that prior to 2018, you had to have earned income of at least $3,000, but that was lowered to $2,500 starting January 1st, 2018. The cutoff still remains at 17. Okay, so that part did not change. And then the phase out for the child tax credit also increased, which was great. So it's $200,000 for single head of household and phase out $400,000 for joint filers. So that means that once you hit those thresholds for income, that child tax credit gets reduced. So now with the elimination of the exemptions. I started to call it dependent exemptions, but it's just exemptions, period. With the elimination of exemptions, once your child turns 17, then it's like, okay, now what happens, right? Because with the Tax Cuts and Jobs Act, the standard deduction was doubled, but the payment for that is that you lost the personal exemptions. So when you're talking about having a family, if you had a family of more than four, essentially you lost out here with the standard deduction and removal of the exemptions. And but under the old tax law, even though your child may have been over the age of 17, they may be college age, you could still have that dependent exemption. That no longer applies. So now we have what's called the other credit. Okay, so with the other credit, that is a $500 non-refundable tax credit. So again, that means if your tax liability is zero, you don't get access to this $500 at all. But if you have a tax liability of $250 and you're getting the other dependent credit, then you only get access to $250. So it's not refundable at all. It doesn't take you below zero. You still have to have that. I lost my train of thought. Whatever. I don't know what I was about to say and I lost my train of thought. So anywho. Oh, so you don't get access to the full 500 if your tax liability, let's say, is under the $500. You just don't get access to that. So now one of the things, I'm going to talk about them both so you can kind of see the difference. So with the child tax credit, okay, you get, the first $1,400 is refundable, $2,000 total. Now, for you to get the child tax credit, you have to pass the relationship test, okay? That's going to be make sure I get it right. your son, your daughter, or I think it works for grandchildren too. Let me make sure before I lie. Okay, I think so. But now you also have to have a social security number to get the child tax credit. And this is important because we have people who live in the United States that have I-10 numbers. Okay. So for the other tax credit, you can have the other dependent credit. Okay. You can have an I-10, but you have to be a resident of the U.S. You cannot be a resident of Canada or Mexico. That is a change. Okay. So the Tax Cuts and Jobs Act, eliminating that personal exemption, it really starts to impact people when your child basically ages out, right? Once they are over the age of 17, you don't get the child tax credit and you don't get the dependent exemption. And depending on your tax liability, you may or may not get access to that additional $500 non-refundable other dependent tax credit. Okay. So the main thing is that, for my tax professionals, I have a lot of tax pros that watch my shows. We have to do what's called due diligence. Okay. We have to do our homework. So when we tax professionals are asking you, taxpayer, for information to substantiate, basically prove the relationship between you and the child you are claiming, then that's because it's our job. Because if we don't do our job and you go and you claiming little Susie and Joey down the street for whatever reason, right? And if you do that and we did not do our homework, we can also be fined for that. And so, so as tax professionals, you need to do your homework. And if it don't look right, don't do it, because it's really not worth it. And for you, the taxpayer, trying to claim children that don't belong to you is not worth it either, because if you get busted, you're going to have to pay that money back plus a 20% penalty. It's crazy. So just know that, with the child tax credit, only the first $1,400 is refundable. People are already starting to do the math on that and are saying, okay, I heard it was $2,000. Yes, it is, but you don't have that kind of tax liability. So you only get access to a portion of that. And then, of course, when you have dueling parents, this is why you get this stuff straight before tax time, because you don't want the government in your business, okay? Because that goes along, with the earned income tax credit, the child tax credit. If you wind up claiming a child when you're not supposed to, then you have to send, this information to the IRS. The IRS is going to make a decision. And so if it's determined that you were not supposed to claim this child, then you can be barred from claiming the child for earned income tax credit, child tax credit, whatever. You can be barred for life. Okay. And I know I've also heard people talk about divorce decrees. Okay. And let me explain how that works as well, because this is really important as well. Divorces are, I don't know what's the word I'm looking for. Divorces are state level. Okay. We're talking about federal. So even though your divorce decree may say you claim them on even years and I claim them on odd years, but I just go and claim them, period. And then you're sitting here saying, okay, well, the divorce decree says this. The IRS does not care about divorce decrees. They don't operate by divorce decrees. They go by the residency and relationship. Did the child live with this person for the prescribed amount of time, whether it's all year, more than half the year, whatever? Did that happen? If the answer is yes, then the IRS says, okay, great. You properly claimed these kids. You didn't. So you need to give money back. Now, then for that, in that kind of situation, you have to go to court to get this rectified. So it's not, the IRS isn't going to fix this for you. You have to actually go to court to get that kind of thing settled. Okay. I've seen it happen a lot, and people get very upset, with the IRS. They get upset with tax professionals because people come in to file their taxes and we do our job. And there are instances where family members have called tax professionals and said, hey, that person wasn't supposed to claim this child. Okay, but that's not what we do. Okay. That's something that you have to settle outside of the IRS. Okay. You need to go to court to get that fixed. So, so that's why I say get this stuff settled ahead of time of who's going to claim who. It is absolutely okay for one parent to claim the kids on 1 year and another parent to claim them on another year. Also, when you're looking at residency and you've got dueling parents, so let's say it's a tie. Okay, let's say that both kids live with parents equally 182.5 days of the year. Okay, it happens. Okay, it absolutely happens. Then the tie goes to the person that has the highest adjusted gross income. That's how that works. Okay, that is the only that is the only way the IRS settles that kind of stuff. Outside of that, not who's somebody claiming they wasn't supposed to claim them. That is not an IRS matter. They look at where did the child live, who cared for them, where are they, getting their mail, where are they going to school, all that's what the IRS looks at. The residency, where do they live? If they lived in this house, then that's the person that claimed them. Everything else, you got to go to court to fix it. So yeah, so the increase in the child tax credit has been working great for some people. But you know what? In some cases, it's also been a wash with the loss in other places. So I can't really say, yeah, this is going to totally, work out for you, because what we're finding is that there are a lot of surprises that are in other areas that overall people are seeing, reduced refunds and also increased tax liabilities. So where, that increased child tax credit kind of helps to ease the burden. There are in some areas, especially for my employees that worked from home or people that had a lot of employee expenses, that part has really killed on the tax returns, and even this child tax credit doesn't even make up for that. So it's something. It's great to have it. $2,000 up to $2,000 per child, but you know what? You just have to see how it all comes out in the wash. All right, you guys. So thank you guys so much for tuning in to Home Biz Tax Talk. Again, we are here Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. All right, have a great day, and I'll see you next time. Bye.